So today, due to the Fed's news, the gold make new high, then make new low. So this actually turns the trend into what we call is opening wedge. Okay, because typically the wedge looks something like this, right? This could be a wedge. However, actually the wedge is upside down. It actually becomes like this. The high is getting higher, but the low is getting lower. Something like this. Okay, like a horn. Okay, yeah. So this actually is a expansion pattern, and this is really very tough to trade because when you find the new high was breakout, a lot of people are buying at the high and or buying the pullback, but their stop loss could be below the previous low here, and then you could just hit. And to be worse, after it hits the lower low, it actually bounces again. Okay, and here is what we see today. So it's quite very normally I don't like this pattern because and I don't really want to trade this pattern because when you have a breakout, and normally what we teach is to break out a new high we can buy, or with a 618 to buy. Okay, definitely we are getting a better price than the previous those people who are chasing. Okay, however, due to the news, the volatility is increasing. Okay, so the volatility is very high, which gives unfriendly, I call, okay, unfriendly trading environment. So in this situation, I want to emphasize, okay, first of all, make sure okay, the correct lot size too. Okay, you have to be patient to wait for the best entry, because even a 5 minutes charts, okay, look at the how fast the price goes. Okay, within 5 minutes it bounced from 1909 to 1924 or 25. That's crazy. And within 30 minutes, right, it shoots up $50 and then all the way going back from 1977 to 19110. It's actually $70. So the volatility is too high for us to trade the normal situation. So I want you guys to trade the correct lot size. Do not overtrade. Do not trade too heavy, and you have to wait for the best entry, such as the previous pink bars high here. If I mark is 1911, could be a good place for you guys to pull your trigger to buy. However, your stop loss is still set to be about $8. Okay, and in 5 minute charts, what we can see is there's a very good inside bar breaks up, right? So you can use this inside bar break up to trade, and make sure 1925 you put your stop loss below 1914. That is actually risking about $10. So I think if I give only $200 risk, the maximum trade you can take will not be existing 0.2 lots, right? So promise me, do not overtrade, okay? Try not, and don't even think about revenge trading, okay? Because I know a lot of people will be upset when the stop loss hit, okay, and then it bounce up so fast, right? And people like to, to get a re-entry, and even want to re-entry for double the loss size so that it can recover the loss. Don't do that. Can you promise that? Okay, so whatever this price goes, whatever the market goes, okay, just take it as a fact. Okay, it happens. This really happens. Although it don't really happen a lot of times, if it happens in a very, very, very occasionally it happens. But we have to understand how to encounter this kind of situation. Can you? If you understand what I'm talking, you can give me 5. Okay. Volatility is too high for us to catch the trade, and you have to be very, very objective, okay, a lower low was made, and you should actually stop loss, and you can better get a better entry and still rely on those patterns what we taught, like inside bar breaks up, like the previous all the way the previous structure here, the minor neckline here. Okay, that's what we get to encounter this kind of situation. Okay, but try not to be killed from one losing trade. Okay, I understand a lot of people are complaining about the market. I see, hey, the gold, it looks like really it's too volatile. Okay, too vulnerable. Okay, up and down, and look at the price. You can for $200 in a day, for $100 in a day, and it can for $70 in a 1 hour. Okay, so this is really not very good. Okay, so the only thing I want to ask you guys to do is to protect your account. Okay, do not be wiped out. Okay, you have to still wait for the best entry to kick in. All right. Yeah, Rafael said, thank God I can risk management now, but it took me 2 years to learn. Yeah, I think for those people who can survive in this kind of unfriendly environment are qualifying traders, okay? Because you guys know how to trade correctly, how to follow the principle. All right. Okay, so here let's get back to the chart. Okay, so in 4-hour chart, the gold is still doing in this triangle. Okay, and we can see this triangle still not broken. It looks like it is almost broken in just in the last 1 hour, but now it forms a pin bar, right? So this tells us it's still in consolidation, and we are still waiting for the entry, for the directions to be made. Okay, so I think right now we can stop for a while to trade gold, but we can look for this structure. Okay, use the structure to help you to determine where could be the next wave. Right, so the structure is from 1900 to 1911 of the support, and the resistance is at 1954 to 1960. Okay, this pin bar tells me there are sellers from here, and the sellers are released from just from the last rally, and the buyers are here ready to buy, but it's still in a very big consolidation. So here is my final answer for the gold. Okay, I will choose to buy the gold if I see a strong green candle close outside. Okay, look carefully of the condition. Okay, I need to see a green big candle to close above 1962, and then I will go for the buy. Okay, yesterday I mentioned to buy from 1911. Okay, and I think some of our students really capture the trade and makes about 300 pips. Today, if you still have your original position, you can try to add some more. Okay, you can add more position because this is still a pullback. Okay, in the meaning of this previous pivot here. Okay, you can trade this as a breakout and pullback. Okay, but to be safer, you have to wait for a big green candle to close outside of 1962. Number one. Okay, green candle close outside 1962, and then go for any bullish pattern and aim. And this time we're going to aim trend 2010. 201, no, because the sellers are testing here, test here. So 2014, okay, will be the next target of this here, 214. Okay, at least we can earn about 700 pips. Okay, from 1960. All right. Then plan B is wait for a strong red candle to close below 1902. Okay, strong red candle to be closed outside 1902, and then find all the bearish pattern to kick in. All right, so these are the only two plans I will be interested to trade. Otherwise, within this triangle, anything could happen. It could rally from 1911 to 1954, that is 500 pips, and it can drop sharply from 1960 all the way back to 1918, and that's too fast. Okay, the range is too wide for me for us to catch the next trend. Okay, so I would like you guys to focus on this triangle, and I think you can win a lot of money from this either one of them. All right. So are we okay for the goals plan here? Sorry to be off topic, Jay, but I have a question about your winning ratio. Is a lot higher than commodities, equities, ETF, or forex, or is similar, or all of them? All right. My winning ratio really depends on the trading time frame. Okay, it's not about the assets. If you are asking me about my stocks trading winning ratio, it could be very high because stocks don't have leverage. I can just apply the buy and hold strategy. I can always be the winner. Okay, in the stocks you need to pick the correct companies, right? But for the commodities and for the forex part, it will be tougher than the stocks. So of course the winning ratio will be drop. But I'm kind of this person who will be focusing on better entries and better stop loss and better reward and risk ratio. So my winning ratio really depends on the time frame. If I trade a large time frame, the winning ratio could be more than 70%. If I trade lower time frame, okay, the winning ratio may drop to like 55 to 60 because in smaller time frame, you will be, the price will be more easily to break out or touch your stop loss. Okay, yeah. So it's not about the asset class; it's about the trading time frame, depending on what kind of time frame you are trading. For example, a 4 hours pin bar is definitely reliable than a 5 minutes pin bar, right? Can you get me? Okay, 4 hour pin bar, okay, successful rate, it will be higher than 5 minutes pin bar. That's is almost 100% right saying. Yeah, but the reward and risk ratio will be different, and also the frequency will be different. Okay, but the frequency of finding 4 hour pin bar will be much lower than 5 minutes. Am I right? Okay, so in the end, what we're doing is we are doing this triangle. Okay, this triangle cannot reach all the pivots or all the dots to the maximum. Okay, because the first one is your winning ratio. The second one will be your RR ratio, and the last one will be your frequency. You're trading the number of trades you find. Okay, so basically it just means you cannot have all the three to go to maximum. That's impossible. Say for example, can you find a win-win ratio? Winning ratio is 100% and plus R ratio is 1 to 1,000, and you can still find as many like this kind of trades as you can. Can you? Do you believe that? No, right? Because if we are focusing on high quality trade, we are focusing on winning ratio, we are focusing on R ratio. So we want to maximize these two elements. But of course, your number of trades you find will be decreasing, right? You can only have 2 to go to the maximum, and while the third one definitely you will be affected. And for the people who are trading higher time frame, I will recommend to do in this rule. Okay, so for higher time, for 4 hour charts and above, okay, you should focus on the winning ratio and R ratio. Will be good. Will be good. But if you are looking at a lower time frame, the beauty is the number of trades what we find will be increased a lot, right? However, you still have to choose which one you want to sacrifice, the RR or the winning ratio. Which one? You want to sacrifice a little bit of winning ratio, or you want to sacrifice a little bit of R ratio? You have to choose one. You cannot have both to all go right. Okay, for me, in a lower time frame, because what's the problem with lower time frame? The lower time frame, the volatility, okay, is lower, okay, which means it actually becomes harder to go for a RR ratio which is greater than 3. Do you agree? In 5-minute charts, if you find the support and find the resistance and trying to buy from the bottom to the high, even you bought at the support, maybe after the spread and after you separate targets, okay, your overall is actually become harder for you to get the previous entirely high. Maybe you can only get to the middle, and that's why the R ratio could be only a dream in a lower time frame. You cannot expect too high for the R ratio in a lower time frame, because a lot of times in a lower time frame the markets do like this, okay, breakout, pull back, and another rally didn't really go very far. It hits into another resistance and then all the way going back and breaks your stop loss, right? A lot of things happen in this way. So in a lower time frame, I will adjust my RR ratios expectation from like 3 to 1 back to like 1.1 to 1.5 or 1 or close to 2 to 1. Okay, I think if lower time frame can give me a 2 to 1 R ratio, I will do that. But for higher time frame, you should actually expecting more than that, like 4 to 1 or 6 to 1, because you know in higher time frame, the price can go relatively higher. Okay, the price can move longer than lower time frame. Okay, and I will still trying to make sure my winning ratio will be flat, close to like more than 50%. Okay, I don't need a very high winning ratio. Okay, but in a higher time frame, since my trading frequency getting lower, so my winning ratio could be relatively strong because it's higher time frame charts become more stable. Okay, so like in 4-hour chart, you should have some winning ratio more than 60%, and you have an R ratio super good, like 4 to 1, 6 to 1. Okay, but the lower time frame, do not expect too high of the R ratio, because the volatility actually constrained in a small range, which is harder for you to get a super good R ratio. And a winning ratio more than 50%. Okay, so these are the two types of expectation I'm looking and I'm using. Okay, so I want you guys to understand the logic behind this. Okay, because you cannot expect too much in a lower time frame trade to have a like 3 to 1, 4 to 1 R ratio. It happens, but still the chance is much lower than you can find in the 4-hour chart, right? Understand, Rafael? Okay, so I think other students can apply my settings, okay, into this, okay, because in a lower time frame, if my winning ratio is stable and I have a greater than 2 to 1, okay, I'm still winning money in a very consistent way, okay, and I will be fine. I will use the money that I made in a lower time frame to accumulate. Okay, so this is to accumulate your account. Okay, accumulate your wealth from this lower time frame trade, because you can keep earning money, lose more, earning money, lose more, right? And in a large time frame, okay, you can try to find those long-term trade, long-term investment trade, okay, such as plus the fundamental driven, okay, and you can use this, okay, to double your account. Because whenever there's a very strong trend like gold, right, it rally from 1,004 to 2,000, okay, $600 move, even you only have like one lot, you'll be very rich by then, okay? So use this kind of a long-term trade to, okay, to double your account, but you know that this thing will not happen very frequently. What we can do is you can try and go to lower time frame to accumulate your wares, and then you find a very good trading long term, and you can like put like 5% risk on that, and you have a 6-to-1 or even 10-to-1, or you can buy and hold, okay, in stocks, in equities. You are finding too many trade setups. Yes, yeah. Don't trade too many. Don't trade too many. I think one day, three pairs is enough for us. Okay, so 3 pair a day is enough. Okay, do not trade more than 3 trades a day, because you have to manage all 3 charts, and it's hard for you to really determine what's going on. And if what if all the 3 trades goes wrong and you actually losing very bad. Understand? Okay, and thanks, Rafael, to raise this question. I think it gives me a chance to explain you guys something even advanced, okay, some advanced knowledge in winning ratio, R ratio, and trading frequency, okay? Because the fundamental, the foundation of the trading logic that I teach you guys is we are trying to get a 2-to-1 plus a 50% winning ratio, right? So this is what the job. What is our goal here? Okay, but in longer charts, in higher time frame charts, you can expect in even higher winning ratio and even higher R ratio, but do not expect these trades to be fine easily and to be to have so many trades of these good setups. Okay, just like the gold. Okay, just imagine either plan A or plan B to happen. Do we need to wait? Do we need to wait? Yes, you have to be very patient to wait for the price to go beyond 1962, to go, you know, below 1902, and start to have a long-term trade to gives your very good profit. But before that, you have to, you know, bear all these kind of fluctuations. You have to bear all this kind of a fake breakout or hit or stop loss hunter, right? Or, you know, this kind of opening wedge. Okay, it's hard in the consolidation here, but it will be easier to trade after the consolidation, but you have to wait. All right. Okay, so let's just go to some other pairs. Okay, since today we have this fundamental news. Okay, so euro looks like it's a wide range here, but the high failed to break 1920. Okay, so you can put a strong resistance here. 1920 will be a strong resistance, and 1.1775 will be a good support. Okay, good support here. So the euro is still sideways, just to focus on buy the low and sell the high, and until it breaks up, okay, or until it breaks down. Okay, same logic here. Sterling have a little bit of problem because it shoots up today, trying to break the today's high, but failed to maintain above. So this turned out to be a looks like a fake breakout. Okay, but yet it's still is above this trend line. Okay, so maybe sterling will have some other chance to buy it again. Okay, it's better than euro because euro is in the previous bottom, right? But the sterling is still in the uptrend channel. So I think the sterling will be okay to, you know, to go higher. Okay, can try to buy some sterling. The Aussie also have a flipping from 0.70 to 70. So do not chase the price above there. Okay, try to buy the low of the Aussie, like 0.72 would be good chance to buy the Aussie. Use the neckline for the Aussie to buy. Buy the low would be good, okay? Buy the low. All right, today the dollar index still not reversed, okay, because we checked the dollar index. It looks like it's getting support from 92.40, but it cannot break the previous high here. So it's still become rejecting from 93.50, and I think it may have another fall because in weekly chart the dollar index really didn't change anything. It's still very bearish. Okay, so weekly chart the dollar is still bearish. So find your ways to buy the low of the major pairs. Okay, the oil is breaks up in daily chart. It breaks 42.65 and forms this kind of triangle. Okay, so I think it's okay for us to buy the oil again. Okay, it comes back to the origin of the rally here. So your stop loss could be below our 42.19. Okay, we'll do that. And use this structure breakout or triangle breakout and pull back to buy the oil and aim like 44 or even higher. For the dollar yen, it's kind of the low is getting higher. Okay, the dollar yen is a little bit different than the other pairs. Okay, the low is getting higher and the high is getting lower. So dollar yen is also in a very big consolidation. Try to figure out where this breakout will happen. Okay, I think the point will be like 106.75. The critical point here. Okay, 106.76. If the price can break out that place, maybe the dollar yen will have another move up. All right, and for the BTC, not very good because the price break up and all the way come back 100%. So this actually tells me, yeah, the bulls is losing strength. Okay, the bull is losing their strength. However, it still sits above 11K. Okay, so you can still buy the Bitcoin at this level because 11K is still not violated. But after it breaks 11K, you have to exit all your buying trades. All right. And for the S&P, I'm bullish. Okay, I'm bullish after it breaks this high, like 3,002. So keeps mentioning the S&P don't short, don't short, don't short. Okay, the stocks market really doing very good. Look at the Tesla, look at the Apple. Okay, it's all making all-time high. So as long as there's some, those branding stocks are making all-time high, don't short S&P. It may still going higher. However, you can consider to short S&P after the breaks the recent channel. Okay, the uptrend line. If this uptrend line was broken, it may pull back to 3,400, I think. Okay, so this could be the view for the S&P. Okay, try to don't short. Okay, also you don't want to chase the high because you don't know when the crash will happen, right? Just like the last time, you don't know when the crash will just happen. Okay, like uptrend, and boom, it's just one candle engulfed 10 candles. Okay, so try to short it when the trend line was broken. What do you think about DHI? That's great run. Okay, see the DHI looks not very good to buy at this time because the trend line is going to be broken maybe, and I personally don't want to chase a high here. Okay, if I really want to trade these stocks, I will wait for probably I will wait for like 68.50, like this place. I wait for the price to come back to this range. This is too high. Okay, it breaks new high, but there's no correction yet. So just wait for the correction to end and then you buy the low. Okay, should I close your position? You can close half, yeah, because this is turning around, it's turning against your favor. So you have to take some profit first, okay, and then wait for the price to getting an even lower price. If you really think that this is a good company to invest, then you can have a very cheaper price to get in. Okay. Yeah, it's monster rally. I do agree with you. Yeah, recently a lot of good stocks really, you know, climb very high. One of this is Xiaomi, which I said in the Hong Kong Stocks Exchange, the Xiaomi company, 1810 of this China's uh, manufacturing company in cell phones and home domestic uh, electronic products. Okay, so let me just check where the Xiaomi goes. I bought some Xiaomi recently, and it really makes a very good run. Yeah, you can see after this long-term cup and handle patterns, right? It breaks all-time high to 20. Okay. Yep. So this is a really very good investment. We bought from 14 and now it's 21, earned about 40%. Oh, sorry, 50% of this chart of this company. Okay, so if you ask me what's my view, I will still hold, but I will took some money. I will took some profit, probably in like 1/3 or half. Okay. Yep. I think I could actually update in TradingView so that, yeah, some other investor can, uh, to take some money. You got your US version based on your car. Yeah, good. So for stocks, you just set starting and let it run, no TP. Yeah, for stocks, you can just let it run because stocks for me, I will use the value investing idea because this is a really good company, right? Just imagine Tesla. If you have some Tesla stocks in the 3 years or 4 years ago, okay, you never imagine, you can never expect the price will just just doubles, right? It tripled or even 7 times or 10 times high, just within 1 year. You cannot imagine that. A good company looks like maintain some position so that you can enjoy the rally of the bullish trend. All right, the range break on retest 400 is a beautiful trade. Yes, yeah, this is really a very super good example of a Tesla. You know, breaks all-time high in the year 2007. A lot of people think 400 will be too expensive for the Tesla, but after the breakout, it just no stop, it's non-stop, right? And then a huge pullback happens here, and then all the way from 400 to 2002. Although, if you ask me, do you still want to hold the Tesla? I think, well, this could be it's too high for me to chase, okay? But I would rather to hold my balance position, yeah, inside bar 2 at 400. Yeah, yeah. So if you apply the correct knowledge, correct trade setups in the stocks market, you can be doing very good. Yeah, because you have the good company to support. All right. Okay, so I think that's all for today. I will upload the webinar to the YouTube channel, and please watch it and share to your friends. Okay, so that they can be benefit from this market insights from Jack. Right. So I'll see you next time. Okay. Good luck. Trade carefully. Do not blow up your account. Okay. Because it's really a crazy market. We have never seen such crazy movement before. Okay. It's super crazy. Like just one day, just 1 hour, it can break, goes up 70 and all the way back 70. Okay. This is a very tough time to trade. So try to avoid this kind of tough market and try to get even a very good price. It's either a very good price or it breaks out the triangle, gives you more clear directions. Okay. Do you mind charting MMI? What is that? Company MMI Marcus Milk chart. Okay. See. Well, I will not choose this kind of stocks because there has to be a reason that the price is at a very low price. Okay, right? It may rally, but I mean, the S&P rallied so much. Why are you going to trade or you know, a product which is less performing than the S&P? Why would you choose that? You don't choose the stocks because it's just technically it is in a lower price, right? You have to understand what is the logic behind of this company. Okay, in weekly chart, yeah, I agree. This is sideways, a long-term sideways, and come to the base here. This base is here. It's hard to drop below 22. It may rally to 30, 36 or 40, but it's very, very hard for you to. I mean, you'll be spending more time, okay, by holding this company. Look like what it did last time. You can sideways for years or 2 years sideways, and then a rally, and then come back again. So this is not a very good company to invest, personally, I think. Yeah. Yeah, I'm not worse to. I mean, the opportunity cost will be higher in this kind of stocks. Yeah. Said Rafael said, "Just thanks for everything. Your psychology is my goal. Do you mind chart? Okay. All right. So if there's no other questions, we'll end this webinar today. Okay, let's have some fun and have some good trade ups. Okay, I expect more trading discussion in our group. Right? Yeah. Please put your charts, put your thoughts, and discuss with your, you know, your friend, with your other traders in our group, and I will just monitor, and I will go into my give my conclusion, and I will tell you guys what is my thoughts. Okay, we can exchange our thoughts and try to have some good products to buy. Okay. All right. See you next time. Bye bye. Yeah, I will upload the video recording. Yeah, I will upload now.